ever since we got rid of what was it, like the week after Liberation Day, where we called it round one, things settled in, capital markets, unfroze themselves, and issuance has been moving up and to the right. So as of this week, we're above 96%, almost 97% on pacing to prior year. And if these trends continue, right, if this underlying backdrop that I've talked about, deposit dollars sucking in from the rest of the world into the US, loan growth taking place off of that. Even further from that, foreign corporations. So I mentioned L'Oreal specifically. Why? This week, they launched their first dollar bond offering in the like from the US based financial market. So the first, call it an onshore dollar bond, where L'Oreal tapped its dollars, not out of London, not out of Paris, but right here in the US. That's a key signpost. A major European conglomerate, to get the dollars it needs, has to come to the US, right? You can't create these synthetic offshore dollars any longer that you could in the rest of the post World War II history. Um, so if you go down from there, you just drill down one level. I'm gonna split that IG issuance between financials and non-financials. So why financials are important? They're really an intermediary. They go out and raise dollar capital through like a bond offering on their balance sheet. On top of, if you're a bank, you can utilize deposits to fund them. But you see like private credit issuers as well, annuity issuers, like they're all tapping to go out and create new loan assets to fund, get dollars flowing into the rest of the economy. So financials are your key intermediary. If they're not expanding, they can't go, recycle that debt and create a new loan for an industrial issuer, or a utility, to go out and create an actual good or provide a service into the economy. Right. And so what we saw year to date, the financials rushed in January, front running. They wanted to go out, tap debt markets quickly. They were actually well above 2024's pacing. So the financials stockpiled themselves early. They went out and built out a treasure hoard of dollars on their balance sheets. And then from that, what do they look to do? Well, with that, they can't just sit on dollars or park it in treasuries, right? They'll have negative spread. They won't make any money. They have to go out and lend into the real economy. And so as we headed into Liberation Day, right, we started slowing down. And then for 3 weeks there, the last week of March, or yeah, the final week of Q1, first week, the week of Liberation Day, April 2nd. And then the week following, you see that red arrow, the financials stopped expanding, right? They slowed down. And then they also, on the next slide, we'll see they pulled back on credit creation, extending new credit to borrowers to go out and do something. And this was just over paralyzing fear, right, of these tariffs, right? But as the market has set in and gotten its footing, you've seen the financials begin raising debt again up and to the right. So they're part of this borrower base that is pushing us up to um, that, like up against that 2024 pacing, pushing the credit expansion back up to where we were in 2024. And if you see this trend continue, you won't see a recession, like from a nominal standpoint. And this is really like the goal, the key objective. You cannot have a nominal credit expansion slowdown, right? If the musical chairs stop, if the music stops, and you have to mark to market bad credits, that's a situation that can get really ugly. So you don't, from the credit system's perspective, it wants to keep the party going. It wants to keep the dance going. And eventually, we're going to have to pay the piper, right? We're going to have a bad hangover, but you don't want it to be through like a credit contraction, from the standpoint of this legacy system itself. So you've seen financial issuance, we're back up. after stepping on the gas starting mid-April, we're back up to pacing above 2024. We've been ahead for every week in May, and this is just a drop. It's like every day, 7 deals, 8 deals, new investment grade issuance, and the market is open.